Hi there, welcome to Economic Observations. My name is Chris. Today is the 9th of May, and thank you so much for watching. While I was out west in the lovely state of Idaho with a very dear friend from Tanzania, well, the stock market fell. Then it fell again. And today, well, it continued its downhill climb. Trillions of dollars in margin calls. People are selling and getting out of the market. It is a little bit of a free fall right now because of so much uncertainty. The largest tech stocks lost over $1 trillion of value in the last 3 days. 3 days. 40% of crypto owners are now underwater. Crypto from a year ago is down 48.5%. In the past month, Bitcoin is down 30%. Forget Ethereum, they all kind of follow the same path. And well, it's not looking so good. So people thought they had all this wealth. You have all this wealth. It's only on paper unless you sell it. It's just on a screen. Robinhood is trading at 70% of its IPO price. Rivian, same thing. These tech growth stocks are doing so poorly. Well, I'll tell you what's going to happen. So we're seeing the effects of these interest rates immediately affect the stock market and cryptocurrencies. And once the stock market and all these companies are bleeding money and having mega losses, well, they are going to have no choice but to tighten their belt. And when they tighten that belt, it means people are going to get laid off. This that's coming in the fall is going to be a white-collar crisis. There are going to be so many people that lose their jobs. And we're not going to see it right now, but we're going to see it soon. And it's going to happen sooner than you think. I know I got caught up in the great financial crisis in 2008. I didn't lose my job until 2009. 3 small layoffs that accompanied after September 15th. And the first one was mid-November, the next one was mid-December, and then I was at the end of February. So there is going to be planned layoffs, and you bet your button that once that happens, well, their stock futures aren't going to be worth much if they had some. They're not going to have extended unemployment. They're going to have a really tough time finding jobs, and well, the house that they bought, it's going to be underwater too. Just wait and see. If anyone is buying a house now, bad mistake. Don't do it. There are 1.1 million homes that are being built right now that are slated to come to the market in the fall as well. And then you add another 1 million foreclosures, there are more than 1 million homes or families that are 90 days behind. And they're either going to be forced to sell or they're going to be forced into foreclosure. And those houses are going to come onto the market. And it's going to all collide at the same time when white-collar people who are working from home or working part-time in the office are going to lose their jobs. And then what's going to happen? What we're going to see is something like we've never seen before. I mean, people argue with me saying, no, it's only going to go up, up, up. I don't know what I'm talking about. Follow history. See what happens when we try to, give free money out for too long. I mean, people and companies and investors had nowhere to put all this cheap money, and they were borrowing it at a song. And they all invested it thinking that it was just going to go up, up, up. Well, my friends, it's not going to go up, up, up. We are going to see a change in the tide. And if the Fed continues to raise interest rates like they say they will, just wait. We're in for carnage. We haven't seen rising rates in a decade. And now it's going to affect everything. So I was reading an article yesterday that all this money that was pumped into hospitals, into the medical, well, it's not there anymore. And all these hospitals have to forego all their traveling nurses to fill in the gaps. Some of the nurses are traveling from Florida to Wyoming only to get to Wyoming to find out that, sorry, your contract was canceled. Some are getting on a plane and going halfway across the country to find out that their contracts are canceled. Hospitals are now opting to hire a couple more full-time staff than hiring these expensive traveling nurses. And they are getting hit hard. And gone are the days where you're going to have traveling nurses traveling throughout the country making over $6 grand a week. Those days are over. That's number one. We're going to see it on and on and on and on. And if you think you're going to work 4-day work week, well, companies are going to say if you're working 4 days a week, well, we're going to cut your salary to 4 days. Nothing is for free. And while everyone thinks employees have the upper hand, well, you're going to be sadly mistaken when this market takes a downturn. You're going to be lucky if you have a job. You know, once the spiral starts, it's really hard to get it under control. A lot of the losses were forced losses because people bought things on debt called margin. And when you buy things on margin, you're forced to sell to cover the loss of the purchase that you originally had. So if you bought, I don't know, $10,000 or $20,000 worth of stock and you had to put $10,000 down on the stock, you borrowed $10,000 to pay for the other half, right, the $20,000. If the stock value comes down a little bit, you're responsible to cover 50%. You bought 100 shares at $20 and you put $10,000 down and you borrow $10,000. All right, so your valuation is $20,000. If it goes up to $25,000, well, yay, good for you. You can sell it, pay off your $10,000 loan plus interest, and make your $5,000 profit and take your $10,000 back. But if that stock slides to $15 a share, well, now your equity is only $15,000, and there's all sorts of alerts that go off saying, you need to liquidate because your equity is less, because there's nothing to sell to make up for that $10,000 debt. And that's how they get people. So now you have to sell X amount of shares, whether you sell that stock or another stock, or maybe you have multiple stocks on margin that are decreasing in value, and you don't have the equity to support the debt anymore. What happens if that stock went to $5 on the example I gave? Well, now you only have $5,000 in equity and you owe $10,000 on the loan. Well, you have to liquidate, and they want you to liquidate before it goes to $5 and you have no money. Or you can always put in more cash to cover that, right? You have two choices. You can sell or you can deposit more cash. But a lot of people don't have cash now. And, you know, debt is expensive now. So they are forced to sell their stock. And I gave you an example with 100 shares at $20. You multiply that by tens of thousands or hundreds of thousands of shares, hundreds of thousands of dollars of debt, maybe even $1 million of debt, and you get where I'm going. They're forced to sell, and the cycle just keeps going, and it spirals out of control. And that's what we're seeing now, and it's going to continue to spiral if the market goes down. Tesla today was down 9.1%. Apple declined 3.3%. And Microsoft, well, it was down 3.7%. Some of the energy stocks were doing quite well. But a lot of the tech stocks, the growth stocks, they're not doing so well. So the NASDAQ lost 4.3% today, a 3-day losing streak of more than 10%. That's the largest 3-day decline since March of 2020 during the pandemic's bear market, which only lasted a very short time. And it's a 3-day, 1,341 point loss, the largest on record. I don't know. Tell me if you disagree with me. Do you think this slide is just going to keep going down and down? Hey, listen, I'm getting hit hard. I have a 401k. I've been meaning to move it into IRA and managing it myself for a long time. I didn't do that when I should have. I did sell 70% of my crypto when it was like or my Bitcoin when it was like 48,000, but I still own a little bit, and I don't even want to talk about it. It can't last forever, and sure, they say that the Job market is fierce. I'll tell you, the job market sucks. Have you looked for a job lately? Uber tells staff that it will cut down on costs and treat hiring as a privilege. Well, a lot of companies are going to do that. I don't know. There was another article out there saying that banks are charging more on credit cards. They're charging more on car loans, mortgages, and the like. But if you have cash in the bank, don't expect an increase in your interest rates. I guess they're going to hold on tight because you and I have money in the bank. We don't deserve to get paid for it, apparently. They are just charging more and not paying more. Strange times, folks. You know all those retail traders who invested in the meme stocks in 2021 during the pandemic? They have lost all of their gains. The tech and meme stocks beloved by young amateur investors. It says retail traders have now lost all their money they gained during the pandemic, according to Morgan Stanley. Many retail investors made huge gains as they bet big on tech stocks such as chipmaker AMD and EV company NIO. But now they lost it all thanks to the Fed Reserve, because nothing goes up infinitely. Alright, anyway, I hope all of you mothers out there had a wonderful Mother's Day. Thank you so much for watching. As always, I appreciate you. Thanks for making it to the end. Be kind. Call someone, tell them you love them. We'll talk again real soon, and have a great evening. Thanks.